In this presentation titled How You Can Earn 15% per year Without the Ups and Downs of the Stock Market, we will show you how regulated P2P lending platforms are transforming modern portfolios. My name is Alex Bleck from Northern Finance, and here is a very important risk disclaimer. This is general financial education and not personal investment advice, because today at the Invest Fair, of course, BaFin is also present and actively involved, and such a crucial disclaimer is very important here. There are a few essential questions you should ask yourself before truly getting started. First of all, up here on the far left, old P2P loans are an asset that can certainly fluctuate significantly in value. It is not guaranteed that you will achieve a positive return within 1 or 2 years. That's why you should have an investment horizon that is a bit longer. A few years are definitely recommended, not necessarily 10, but I would say 3, 4, or 5 years is something you should plan for. Next, you should consider what else you have in your portfolio, such as a house, which for many is the largest investment and represents a significant concentration risk. And that's where P2P loans help to diversify a bit, so you're not so dependent on a single investment while also generating some cash flow. Furthermore, you should of course have an emergency fund before you start investing. Clearly, a few months' salary, as is generally recommended, applies here as well. And then the question is, when it comes to risk and opportunity, how much risk do you actually want to take with your investments here? The thing is, you can earn 15% per year, and that's already a lot. Of course, you can also accept a slightly lower return, and in exchange, you'll have a bit less risk and significantly more security. Ultimately, it really depends on you personally and how you want to invest. Then we have the investment period, which for many loans starts at just 30 days. Some of them really only run for a very short period of time, and of course there are also loans that can last for several years, 1, 2, or even 3 full years. Again, it depends a bit on you and how long-term you truly want your investment to be. The longer you commit your funds, the higher the potential interest rates, of course. And lastly, as Buffett is laughing here, you should have fun with your investment. Personally, I really enjoy investing in P2P loans because there's so much you can tweak, set up, and do, or you can make it completely passive. But I enjoy personalizing things a bit for myself, and for that reason, this is an important point. Here we have the current problem, especially on Thursday and also a bit on Friday. We saw a truly remarkable rally on the stock markets because Donald Trump explicitly said people should buy now, and the markets just absolutely shot up. But things can just as quickly go back down again. Here are a few significant headlines from the very beginning of the year when it was exactly the complete opposite. That's why it's simply good and highly advisable for your own personal portfolio, especially if you're investing a bit more substantial money, to be well diversified and not overly dependent on a single solitary investment like the Nasdaq, various ETFs, or similar financial instruments. The alternatives we've had so far are as follows. First, up here we have investment-grade bonds, which carry low risk and often have maturities of several years, with returns typically ranging from 1 to 6%. That's what you can expect. With government bonds, it's 1 to 2%. There's not much more to be gained, so after inflation, you're actually losing money in real terms. With savings and fixed-term deposits, it's quite similar. The risk is also low, but so are the interest rates. 2.5% is really the highest rate you can currently get, but the terms here are quite flexible. Then third, we have real estate, with returns of 2 to 4% per year. In my opinion, the risk here is moderate and the interest rates aren't particularly high, just a bit higher than with savings or fixed-term deposits. The investment period here is at least 5 to 10 years, or even longer. Then we come to the truly risky investments, writing options, commodities, or crypto investments. I think it's clear to everyone that these definitely carry certain risks. This morning I saw once again that Solana shot up like a rocket, and of course it can just as easily go back down. That's why, in my considered opinion, the risk here is quite high, and the investment period can vary quite a lot indeed. But with crypto, I would invest for several years if you don't want to end up taking a loss. That's why P2P loans are a healthy way to diversify your portfolio and generate cash flow. So, what exactly are P2P loans? Let's clarify that at the beginning. Here, all the way on the left, we have the private investor who invests in a P2P platform. Down here, I've listed 4 examples: Mintos, TWINO, Debitum, and Viainvest. Each of these P2P platforms is overseen by a local financial regulator. These P2P platforms then have lenders on their platforms who are monitored by a second financial authority, and in the end, these lenders issue the loans here. That's how the whole process works, and the repayment looks like this. The borrower pays here, then to the P2P platform, and then to the private investor. That's basically the whole model. It's really not that complicated. And above all, it's important that financial supervision is involved here. So your money isn't being misused. It's very clear what is being invested in. There are clear processes, and it's strictly regulated. then there's another model for how the whole thing can work. In this case, the middle step here is essentially eliminated. That's the case, for example, with INDEMO and LANDE. We'll get to those two in a moment. Here, the P2P platform issues the loans directly without a middleman in between. But financial supervision is still just as involved. Here, for example, is my own portfolio from January 1st of this year until now, May 5th. That's the current state we have here. This is the current status that we have here. And as we can see here, in my portfolio on the left, we have the performance. Here in black, we have the entire portfolio. At this point, it was still positive, but then it crashed here with Trump, and now it's gone up a bit again. But currently, we're still at minus 2.7% return so far this year. And then we also have the point of leverage here. This is how I categorize things in this software, which is free and open source, called Portfolio Performance. This is how I categorize my P2P loan investments. And so far this year, I've achieved a return of 3.6%. And that's also the only investment you can see in this line here. I always enter the interest at the end of the month. That's why there's a little bump upwards. This is the only investment that has had a positive return so far this year. Let's see how the rest of the year develops. And if you annualize it using the internal rate of return, you get a return of 11.23%. And here we also have my monthly earnings. In January, I earned 553 euros, in February 716, in March 629, and in April 528 euros. So that's already a pretty good cash flow, and it helps to keep going during these difficult market phases when things fluctuate so much because you have a certain level of security. This cash flow keeps coming in. The question then is, why are P2P loans attractive? The first point is that it doesn't correlate directly with the market. As you can see, this line has relatively little to do with the others, and that's just a very pleasant thing. Secondly, you can start with as little as 10 euros, and you can individually adjust your return on investment. As mentioned, you can accept a bit less interest or a bit more if you want to take a more aggressive approach. That's possible too. And we'll show you the possibilities available here in just a moment. Very important, you can also make the investment highly complex if you want, or keep it very simple with just the push of a button. And the whole thing is monitored by regulatory authorities. How exactly is it monitored? For example, we have the Central Bank of Latvia and of Estonia. And both of them are also under the supervision of the European Central Bank in this regard. And what's especially important is the separation of investor funds from company funds. Regulated processes mean that your money is invested 100% into these loans, and there are securities backing the loans. With LANDE, for example, these are agricultural loans. Here, individual farmers are financed, and for that they provide collateral, for example, in the form of a large combine harvester from LANDE, and you then have first priority claim on it if the loan is not repaid. That means the court administrator comes in, takes full possession of this LANDE asset, sells it on behalf of the investors, and then you get your money from that. And if this land, let's say, is truly worth 100 euros and the loan is only 60 euros, then you still come out with a very strong and significant return. That's roughly the loan to value ratio at LANDE as well. But of course, it always depends individually on the specific loans, on how much collateral is provided or not. That can vary greatly. It's important that audited annual financial statements must always be published, and also regularly by a certain date. This means you know whether the platform is financially sound. AML processes, meaning know your customer, are also in place. And what's also very important is transparency regarding loan defaults and statistics on how the platform is developing. My portfolio currently looks like this. I have 7,900 euros invested in P2P. That makes up 19% of my total portfolio, and this is how the allocation across the individual platforms looks as well. This is basically a pie chart, and here you can see the individual shares. For example, Debitum is here, or LANDE, or ING, which I talked about with the agricultural loans, and many others as well. So that's what my portfolio looks like, and that's what generates this cash flow. It's important to me to track this easily and to enter the interest I receive into my software every month. That way you can clearly see how the development of this pink line in 2024 went from 300, 250 euros up to over 500 euros. And now, here with this darker line, we're at 600 euros on average this year. Here we have the values for each platform again, and exactly how much that adds up to in total so far this year. Right, as the first investment option, we have Debitum. Here you finance business loans, and that's pretty exciting here. Here we have various industries from the energy sector, video game development, and forestry. There are 22,000 investors involved here, and 30% of them actually come from Germany. So that's the largest share among the group of investors here. We have a 14.8% return, which is quite high, and a 0% loan default rate. I've been here for 7 years, which is definitely quite a long time. 125 million euros have already been financed here, and currently there are outstanding investments of 33 million on the platform. For example, there are forest loans from the Latvian Forest Development Fund. Terms range from 1 to 18 months with returns of 9 to 14%. And what's interesting here, in my opinion, is that individual forest plots are purchased, which are then bundled into a large package, like with this Latvian Forest Development Fund. And this forest package is then resold, for example, to the founder of IKEA, Ingvar Kamprad. And he really likes to collect forests. He invests here. And for making this entire process possible and financially viable, we receive a return of 9 to 14% per year. And if the whole thing doesn't work out, which can always happen, there's always an inherent risk when you invest money, we have a primary first-ranking pledge on this particular forest. That means if an insolvency administrator comes because the Latvian Forest Development Fund can't pay back the money, we are first in line when it comes to the insolvency assets. And it's also very important to note that the company's assets are also pledged here. These are indeed the protective mechanisms in place so that even in the event of a default, which can take a bit longer, maybe several months or even a full year, you still don't end up with a total loss just because you wanted to earn the initial return. So in my opinion, that's a pretty good protective mechanism. Then there's Viainvest, which is something completely different. These are consumer loans from the VIA SMS group. They have 15 years of experience in this field and have had their Viainvest platform for 8 years, where so far there have also been 0 defaults for investors. 43,000 investors from Europe are invested here. The whole thing is also regulated and licensed, and here you can earn up to 13% per year. To be honest, I've been getting more like 12% myself, but up to 13% is possible here. And if you have money in cash and not invested in loans, it's protected in a way very similar to a checking account. Up to 20,000 euros is insured here if you haven't invested the money on the platform, and it's basically just sitting there. A total of 600 million has been financed, so it's also a pretty big player. Then we have Mintos. This is by far the largest player in Europe, and here we have more than 700 million euros currently invested. Over 500,000 users, by far the largest in the market. And here Mintos is especially known for its loans, but now also offers many more options. Namely, bonds. I'm now investing in those as well. They offer even better protection in the event of insolvency, as well as real estate simply for passive income. There are also money market funds if you want to quickly switch to another investment, and ETFs are now available here too, so there's quite a broad range on offer. Here you can invest automatically, as it's described here. This is auto invest as we all know it, or at least people who are somewhat involved in the scene. Maybe not everyone knows it. And the whole thing runs completely automatically. That means you set the criteria once for how you want to invest, and then you just let it run. That's also my favorite way to do it. This way you can earn around 12% returns per year. Depending on how you set the criteria, it can be more or less than that. It all depends on how much risk you want to take. There's also a risk score and other options. You can also manually select what you want to invest in by hand. But I usually do it with auto invest. It's easier, and then it really becomes passive income because you don't have to do anything anymore. Invest once and you're done. Then we also have LANDE with the agricultural loans I mentioned earlier. Here the interest rates are a bit lower at 11.2%, but as I said, in my opinion, you get better collateral here, in particular through land. And here we currently have real estate and agriculture being financed. And just a brief slide about LANDE. Okay, more than 33 million euros in total have been invested here. This is still a smaller player, a bit more specialized than, for example, Debitum or Mintos or Viainvest, but still, in my opinion, very interesting. And then we also have TWINO. These are, again, consumer loans being financed here. They've been on the market for 10 years. They've paid out 17 million in interest with over 22,000 investors, all from Europe. And here loans and real estate are financed currently at 12% per year. The product being financed here looks like what is shown on this iPhone here, net credit. That means you have a digital credit card here. With it, you can spend money on all sorts of things like a kitchen renovation, a new TV, or whatever else you want to finance. And this is basically a line of credit that you have here. It is financed by investors. In return, the investors receive 12%. And what's always very important with something like this is that the company behind it has a track record and is profitable. For example, TWINO made 44 million in revenue last year, 8 million euros in net profit. and currently manages 35 million euros from investors. Exactly. Then we have a somewhat newer platform that offers slightly higher interest rates, but has less of a track record. Nectaro. Here you currently earn an average of 13.2%. There is a very large fintech group behind this, which actually generates billions in annual revenue and finances its payday loans to customers through this fintech platform. On average, approximately 7,200 euros are invested here, and the platform is still quite young. So far, there have been 0.0% losses, which would be even better with a longer track record, but still, there have been no losses at all so far, and there are two types of loans. Here we have the credit line and the individual loan. Exactly, and here are a few more details about it. There is also an auto-invest feature here. Refer a friend, new customer cashback, and buyback are also available. Of course, that's always very important, and this way you can invest here and start earning your first interest pretty quickly. Next, we have INDEMO. This is something completely different from what we've discussed so far. It really doesn't have much to do with the previous topics, but it's just as regulated, also by BaFin, which I find very interesting. And also by the Bank of Latvia, as well as France, Spain, and so on. So it's highly regulated. What do you do here? Here you invest in real estate loans, primarily in Spain, that have unfortunately defaulted. That means someone, for example, didn't pay back their original loan to Santander Bank, and this particular loan has now officially defaulted. So what exactly happens now? The bank urgently wants to get rid of this problematic loan because their primary business model isn't about dealing with old, non-performing loans, but rather about issuing new, profitable ones. This defaulted loan is then, for example, sold to INDEMO for approximately 60% of its original initial value. That means you get a significant discount here, but there's also a property involved with a tenant who actually doesn't want to leave. And here we have a target return, which is one of the highest in the presentation, at 15.1% per year. And then this loan is bought at 60 cents on the euro. There are significant costs of 8% here, which are incurred for the entire legal process of evicting the current tenant, harsh as that may sound to some, so that the property can then be successfully resold. Of course, one might ask, is this morally acceptable? Everyone has to decide that for themselves, but personally, I think it's extremely important that something like this exists, because otherwise banks would stop issuing new loans if they were stuck with their old ones indefinitely. And then you have a potential return of up to 32% here, with a duration of about 1 or 2 years, something like that. Here you invest in loan packages. That means each loan package you invest in contains 8 properties. And you can always track the status here to see how far along the collection process and legal proceedings are, and in the end you receive the interest. That means you don't receive monthly interest here, but rather at the very end. When the project is sold, that's when you get the interest. And last year the interest rates were really impressive. A real return of 26.4% was achieved. So that's a lot. And the whole thing is backed by these assets, by these properties. And this way you can currently achieve the highest returns on the market here, but it also comes with significantly higher risk compared to the other investments. You have to weigh that individually. What fits into my portfolio? How much risk am I willing to take? How much return do I potentially want to earn? So that's all for the current presentation at this moment in time. And now there's a very important note from the INDEMO CEO at this specific point in time.
Ladies and gentlemen, Alex will kindly help me with translating the German language. So, my name is Sergej, I'm CEO of INDEMO, but we really want to invite all of you guys to there are 7 distinct and innovative platforms from Latvia. We have a Latvian national stand under the government of Latvia. It is near the invest stage. Today we have the opportunity, if you are interested in any of the projects offered, to meet the CEOs or founders of each platform. Ask your questions. We will be happy to talk to you and answer your questions.
Exactly. You can then ask your questions to the platform founders, to those who are in leadership positions. That's at stand 51 here in the hall of the Latvian Investment and Development Agency. And there are also some goodies here if you want to take some with you. Things like bags, socks, pens, notepads, all sorts of things. But before we get to that, do you have any questions? Because now we have a bit of time for questions and answers if you have any.
How precisely does it work in terms of taxes? Do you personally have to do anything yourself, or do you not have to declare anything at all?
It works like this. There is no automatic payment to the tax office here, so you have to enter it yourself in your tax return. There's a form called Anlage Cap, and I think, right, then you know what to do. Line 15, I believe. That's where you enter it, and that's the total amount. you then pay 25% capital gains tax on that in Germany. And that's how the whole process works. Exactly. So at the end of the year, you get a tax certificate everywhere. Line number 19, you know the drill. Okay, there's another question in the back.
Yes, Alex, which platform do you invest in? And which platform would you recommend for someone who has no idea at all, something that's easy for beginners?
Yes, that's a very good question. So if we go back for a moment to the presentation, was it here? Yes, indeed, exactly. Here is a comprehensive list of all of my P2P lending platforms. If you like, you can certainly feel free to take a photo of them. Some of the most significant and prominent platforms I currently utilize include Debitum and Monofit, among others. These are the biggest ones. I have a few others. But the simplest platform is a very good question. Perhaps Mintos and Debitum, these are platforms that are quite easy to get started on. They have a truly huge amount of loan volume being financed every single month, tens of millions of euros. This is a significant amount of capital being moved, demonstrating their robust activity. There's a wide selection to choose from, and you can start earning interest pretty quickly. For example, Mintos offers loans with a 30-day term, after which you can start earning interest in your account immediately. Then you can see for yourself whether it feels right or not. That's exactly how you can approach it. Thanks for the question. Are there any more?
Yes, exactly. Hi, my question is about diversification. How many platforms would you say someone should have? What do you recommend?
Good question. Well, I have 17, but I wouldn't recommend that. But I also spend a bit more time on this. Maybe 3 or even 4 platforms. That truly makes sense. But first, start with just one and see if you even feel comfortable with it. And then you can always continue from there. I wouldn't start with 3 right away, but first understand the investment and then invest. And that's how you can proceed step by step, maybe 3, 4, or 5 platforms. That's already quite a substantial amount, I think. But you absolutely have to invest in loans that you fully and completely understand, because only if you truly comprehend the investment can you make good money here in the long run. Otherwise, it's much better to simply leave it and invest in something else entirely. Exactly. Thank you very much. Any other questions you may have?
I have a specific question about a particular platform that hasn't been explicitly mentioned. Specifically, I am referring to StatGuru. Due to the ongoing Russia-Ukraine war, various things also unfortunately defaulted there. And can providers still realistically hope to get their money back from the ongoing Ukraine war? Is anything significant happening there?
Yes, with StatGuru, there were primarily loan defaults because of the widespread real estate crisis. The devastating Russia-Ukraine war certainly played a significant role as well, but interest rates just shot up dramatically and unexpectedly. And so for many property developers, it was no longer worth it to build anything new, and especially in Germany, they had a major problem. You can also see here, StatGuru is still one of the larger positions, even in my portfolio. I've reduced it from about 11,000 euros to 5,000 euros because there were just so many loan defaults in Germany. The problem is in Estonia and Latvia, where they also have a lot of loans, they have court cases that might take 1.5, at most 2 years. And in Germany, it's already taking 3 years for very similar cases. And unfortunately, they can't provide any more specific information yet because they're still in this legal process, and it wouldn't be a good idea for them to weaken their own position by doing so. I hope the situation with these loans they issued in Germany will be resolved soon. The others, however, are performing very well. And last year, I hardly had any loan defaults anymore. But unfortunately, they are still struggling with this Germany issue. Yes, that's right, indeed. Any other questions for you?
If there are no further questions at this time, you can certainly find much more comprehensive information regarding P2P loans and various loan investments available to explore. Then I can really recommend you to check out Alex's YouTube channel, Northern Finance. There you'll also find a lot of videos and explainer videos on the topic. Also, for those who have checked it out, there are monthly updates on his portfolio. So it's really a good starting point as well. And as mentioned, feel free to send a big message from the platforms. If you want more conversations, there are already more platforms present here on site. Otherwise, booth D51, and we look forward to the conversation, and thank you very much for being here.
Thank you for your time.